This is a GDX, the gold miners ETF, with the simplest, most optimistic wave count that I've presented recently. And I just want to review the development, the recent development here. It shows you that right from the bottom in early 2016, the surge was taken as 1-2 here. You see this 1-2 and then another 1-2, and that will effectively develop, if this is correct, will effectively develop into an absolutely explosive bull market above 32. Okay, we're going to go now to look at the 60 minutes, which is detailing the very last jump right from the bottom that is assumed to be the second wave, okay, the tinier second wave. And then we go up, we have a 1, 2, 3, 4. You remember that I took this as a fourth wave. I was projecting a jump. The jump came like this, you see, and it came down. So for all intents and purposes, the weakness that we have witnessed recently is nothing terribly disturbing the bullish development here. It's perfectly normal. We could even go slightly lower, and the idea is that we could probably do something like that over several trading days. And the important thing is to see if it's coming back. If it's coming back, it's punching through the previous high registered here just above 23.80, okay, and it's running up in this kind of style, yes, then I think we can assume that we have a genuine bull move that has quite a bit of lease of life. Okay, I'm looking at the 4-hour chart. So that is your 1, 2, that will be another tiny 1, that will be your 2, and the third wave, if it does go above this level, the third wave is almost certainly going to tackle 25.50. Okay, now if I flip back to the daily to give you a perspective of what I'm talking about, you see, if we get the third wave that I just discussed and it jumps above this level, it's going to tackle this high, it's going to run above 26, and it's going to go into a stretch. It's going to go into a stretch. We can work with some ratios. Let's suppose we work with this. You see, if we go into equality between the third wave to the first wave, we're going to reach 28. If we go for an extension, which is the usual development for a third wave, we're going to exceed the previous high. That will be very bullish. Very bullish. We get this kind of thing. If it runs towards 32.50 and it settles afterwards for the fourth wave, that will be on this scale. You're with me? It'll be on this scale. Then that will almost certainly project much higher highs in the months to come. Now I have to emphasize that this is very optimistic scenario. It's maybe the most straightforward optimistic scenario. We have good assumptions, but we do not have very strong technical support and confirmation for this assumption, for this forecast. It's right there, okay, it's right there. We know what needs to happen. We know what elements need to fall into place over the next several weeks and months for this to be fulfilled. Now here's gold in US dollar, that's spot gold, with lots of different options and wave counts here. I will just focus on the optimistic side in this particular chart, the one that I emphasize in the case of GDX, okay, if it is fresh in your mind. So we're going, for example, with the first, that's the daily, and I'm just going to repeat here the first surge is taken as an A or 1, and then in the case of GDX we took this as 2. Do you remember? That was 1, 2. So we could take this as an A, B or 1, 2. It's not going to make a huge difference because the assumption is that this is going to be exceeded. Okay, looking forward, that's the idea. That will be 1 or A, 2 or B right here. Okay, if that's correct, then the run that started here is only showing us one leg of the developing structure. And as you can see, I have it indeed showing right here. This is a possible wave count. 1, 2, 1, 2, 3, 4. Get rid of this. 3, 4, 3, 4, 5. Okay, nail the first, and it's coming down to correct. it's very much reflecting what the GDX did. If you check the charts side by side, you will see that it's absolutely the same. It came down, and yeah, it can continue a bit lower, and then the idea is that we are probably going into some sideways price action, and I wouldn't be surprised at all to see this sideways price action occupying the entire coming week. That would look perfectly normal. We would be bouncing off the 1260 area, 1250 area. That should be perfectly normal. You should not get too worried if it goes that low, but we do need a bounce. Okay, if it crashes through 1250, 1245, I would begin to wonder if my assumption here is correct, then it will probably look to go much lower. Okay, that will have, of course, serious implications as to development in the price of gold and silver longer term. We're talking about several months down the road. Okay, so we are nearing an important crossing point. Strong bounce from 1250 area, or even from here, going back to check the previous high 1295. That should tell you that there is plenty more upside coming. Okay, that the bull is totally in control, and things are looking great, and gold is shining for now. Now here's silver, and in the case of silver, I have introduced the same scenario of a possible A, B, or 1, 2, and that's another 1, 2, and then basically looking for silver to take the road north here in a substantial way. However, in the case of silver, if you notice the rebound here, where in gold we are somewhere here, we actually spiked slightly above the previous high. In the case of silver, look how far we are. So silver, if you like, is still maintaining the viability of that triangle pattern that I have elaborated on and on for the last few weeks. You surely remember that should be taken as an A, that should be taken as a B, and I said that we're going to have a C with this being an A, that this bounce should be taken as a B. And now if silver indeed crashes, and I would say crashing under 17, giving us a weekly close under 17, is almost certainly telling us that it's heading lower towards 16 and maybe even lower than that. Okay, and that could fit perfectly within the concept of that triangle. Yes, so you'll have your A, your B, your C, and then again a bounce to give us the D and the E, and look further up. Okay, so this is still on, very much possible. I'm going to show you the daily here, and I assume here that we have an ABCDE diagonal pattern that can be taken as an A, no problem. That could be taken as a B, and we had 5 legs up from this spot. It could be taken as a C. So I don't see really an issue here, and that could be taken as a B. The only thing that you might not like, that doesn't sort of look very proportional, is the fact that the C is not really a match to the A. And you see, it's sort of brief. And I would say that it's quite possible that my A, in fact, is lumping together a whole bunch of tinier ABCs that in fact should be split. If you wonder what I'm talking about, could be that this is an ABC, that's an X, that's an A, that's a B, that's a C. Do you see? And then you see here will not look so odd. But in short, not to try to complicate the matter too much, I would say watch this level, watch 17. If it cracks through 17, it begins to slide 16.8, 16.6, it's a dead fish, it's going there. It's going to 16 and maybe lower. Okay, bouncing off this level, reaching back towards the previous high, and we're looking up. We're looking up nice. That's going to target 18.6 and potentially a lot higher. So this is silver. Now here's GLD with the pattern that I've introduced here. You remember the triangle that has actually this particular interpretation is quite negative. We had an alternative. I'll just go step by step so you don't get confused. All the rundown here is taken as an A. If you remember, that could be taken as an A in an ABC. That's ABC, gives you a B. I think that we could work out a scenario here that we actually terminated the C in red. So we have an A, we have a B, we have a C. We're going down for the D, and then the E, and then of course that supposes a solid, sharp break in gold under 1000. Okay, the alternative that you see here, of course, was taking this as an A, and then you work out with a triangle that terminates a B, and then it shoots higher for a C. Okay, that's the bullish alternative. But just to keep us on the right track in terms of the ABCs they're operating here, I'm going to try to open it again to show you. Right here. Do you see? With this being an ABC, we left this behind. That could work as an ABC. For this to play out, GLD is going to continue down, and that will be a critical level right here. I would say 1140, 114 on this chart. Breaking through that, I think we get a confirmation. It's going down for that D leg. Okay, so that's GLD.